and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends, and most importantly, your queries during the show. So please keep commenting on our feed and we will have your questions addressed by our technical expert later on in the show. Before bringing the guests on board, let's see what the global handover looks like. Headline inflation in the US comes in higher than estimated for the month of September, but stocks stage a stellar reversal to break a 6-day losing streak, with the Dow rallying over 1,300 points. Asia is also upbeat, SGX Nifty signaling a solid gap up. European markets whipsawed as reports emerged of a potential fiscal policy U-turn from the British government, and investors around the world balked at the latest US inflation data. FMCG stocks have been under pressure as quarterly updates point to softening demand and margin pressure. How is Q2 scorecard likely to shape up? We find out on the show. Also in focus today will be the shares of Infosys, Mindtree, One and Power Mech. Okay, let's get going and straight talk about the technicals of the market first with Raja Venkatraman of Neo Trader. Good morning and thanks for joining in. Gap up opening, is that what we're likely to have today?
Yeah, good morning, Karunya. So what we are seeing in the market is that the market, we're definitely not able to place a handle on the market, and be it on the way down or be it on the way up. And as the trends are clearly indicating that we are entirely driven by the global cues, yes, we are going to see a very strong gap up opening, and probably we could be trading into the resistance zone. Looking at the option data, which is primarily a very good indicator in the last few years, we saw that there were good put writing at around 17,000. So probably, there were some early cues which some smart people knew about that. And that's why we are seeing a good put writing, and now we are seeing its response in the markets as well. Well, some good cheer from the domestic sentiment by the IT sector headed by Infosys. So all that will put together a bullish bias as we begin the day. But then we have to note that the market is not yet out of the woods, and we would see resistance zone creeping in at around 17,400 to 17,500. So I would be a cautious buyer here still, because the overall markets is trying to indicate a recovery, and that's what I have been quoting everywhere, that 17,000 is a very key support zone to watch out for, because if 17,000 is given away, then we are looking at the lower levels around 16,700, but then that's another day. But today we are looking at the resistance zone, and that is around 17,500. But a cue which I got yesterday, from Bank Nifty, which was the most beaten down sector between Nifty and Bank Nifty, there was steadily a higher low being formed. In technical parlance, a higher low means a indication of a recovery. And so that's the reason why I was more of the bullish. I maintained a bullish bias towards the second half of yesterday, and to my benefit and to my surprise, the US markets also responded well. So heading into the markets today, we got to watch out for at the higher zones in Bank Nifty towards the region of around 39,500. That could be a resistance zone. 17,400 to 17,500 is a resistance zone. So as we head into the day, a dip buy would be advocated, not a breakout buy.
Okay, all right. Point well taken. Let's talk about some stocks that could be in the news today, and it could lead to some stock reaction as well. Of course, we have to start with the big boy, Infosys. Good numbers, I would say, from whatever we've gathered from analysts and brokerage reports. Talk to us about how Infosys is looking on the technicals. There is clearly a lot of news flow, management commentary. They've revised the revenue guidance on the higher side. They've slightly lowered the margin guidance, being a bit cautious. But it's also the buyback news which could keep the stock very much hot and happening in trade today. So tell us, what should investors expect, not just today, but in the days to come as far as Infi is concerned?
Well, some positive cheers in Infi is definitely a welcome news. But then the price definitely is not saying that so far. So it really needs to cross around 1500 to really stage some sort of upward revival. Otherwise, it's going to be a very muted response to the results. And I feel that it could continue to oscillate in this range-bound action, and we should continue to hold on to our positions, if any, because exit clause will come in only if it dips below 1350. Otherwise, Infi continues to remain a good opportunity. And if somebody is looking to invest fresh based on some positive revival from Infi, which could trigger a revival in the IT space as well, then 1500 is the key trigger to watch out for.
Okay, all right. How about Mindtree? We've been speaking to people on the show, and typically the consensus has been, more in favor of mid-cap IT rather than the blue chip names. Is Mindtree looking good to you? They also delivered numbers last evening. Q2 earnings have largely beaten estimates, profits, revenue, even dollar revenue. They've all come in better than expected lines. So talk to us about the technicals of Mindtree as well.
Right. So, in comparison to Infi, Mindtree seems to be set up better. And like you rightly said, mid-cap IT are definitely attracting more interest. And that's the reason why I would prefer a Mindtree because currently it's holding up quite well. The revival from lower bounds are testing the 3400 zone, and above 3400 would be a very good opportunity to enter into a Mindtree on a trading basis and also on a short-term play basis.
Okay.
So you can expect targets around 3600. That's what I'm looking at.
Okay, all right. Another earnings candidate I want to flag off is Angel One. Their Q2 profit has grown nearly 18% on a sequential basis. Income has risen 9%. They've announced interim dividend of 9 rupees per share as well, which is almost as much as 35% of their consolidated net profit. Talk to us about Angel One, how it's looking on the chart.
Yeah, Angel One has been attracting attention, but it has not cleared a very key resistance zone around 1600. So I would keenly track Angel One and wait for an end of day closing above 1600, because if that opens up, then it gives us a very good potential short term or momentum investing candidate where we can expect targets towards 1900.
Okay, all right. And the final stock on my list is Power Mech Projects. They've bagged a contract close to 500 crore rupees from Bangalore Metro Rail Corporation. Now, this project has been received by a JV company wherein, which it has formed with RITES. So it's a 49-51 JV with 49% with Power Mech and 51 with RITES. We want to focus today on Power Mech, very less talked about stock. How's it looking on the chart? Seen a good momentum last 1 month, almost 500 rupees on the upside, but can the resilience continue?
I feel that the positive news in this stock has been priced in, and I would expect some profit booking to emerge in this stock. So I would not be a buyer in Power Mech at the current levels. I would wait for declines towards 1400, which could be a good opportunity for us to enter into the stock again.
Okay, all right. Raj, I request you to stay on with us. I want to touch base with Sanjay Manyal of ICICI Securities to also talk about FMCG stocks and FMCG sector specifically. Sanjay, good morning and thanks for joining in.
Morning.
Lots has been talked about the rise in commodity price inflation and then the subsequent cool off that has happened. How is the FMCG sector looking right now as we stand, given the cool-off in certain pockets of the commodity basket? Do you think it will start reflecting in Q2 numbers, or will the second half is what we should look at from an improvement in numbers standpoint?
Yeah, given the fact that commodity prices have started moving downwards from say June onwards, I believe a lot of FMCG companies were holding inventory of anywhere between 1 to 3 months, and also when the palm oil comes down, say by 30-40% sort of from June to August. A lot of derivatives prices moved up only after 1 or 2 months. So I think the Q2 was the quarter where most of the FMCG companies were holding the high cost inventories, and that's one of the reason why they have not taken price cuts in the entire quarter two. Some companies have taken smaller price cuts, but those are sort of more of a symbolic ones. What we believe that the commodity prices decline would be reflected largely from Q3 onwards. We have just heard that HUL has taken a big price cuts in October. So that will be reflected in Q3, both in terms of margin as well as what we could understand that lower prices or higher ad spends or the grammage restoration would lead to the volume growth once again, which was missing from last 2-3 quarters.
Okay, all right. Like you said, the price cut that they've undertaken is largely symbolic, but the stocks have been languishing for quite some time. Even when the market started picking up, we saw a minor spurt come by in consumption and FMCG stocks, but it hasn't really been able to sustain the momentum. Talk to us about the earnings forecast, the valuation picture as well, because several people we've spoken to say that FMCG looks fairly attractive. It hasn't seen, the run-up that others have. So at these levels, FMCG looks attractive. Do you concur with that view? And what are some kind of baskets within the FMCG space that one should look at? Is it more export-oriented companies, more companies which have more rural exposure, discretionary spends? What kind of sub-segments should one look at right now, which look most promising?
So where we are positive within the FMCG sector is very selective pockets. We like foods part, packaged foods part, which is very much underpenetrated, where the scope of growth is much larger, where the opportunity size is much larger, and given the fact that penetration levels in many of the food categories is anywhere between 25 to 40%, there's still scope for growth. Moreover, a lot of these foods category are contributed or largely contributed by the unorganized sector, where the shift from the unorganized to organized can take place, and that can lead to growth for the FMCG companies. Whereas for certain categories like the soaps and detergent and oral care, hair oils, these are the category which are most saturated ones. These are the category where we will see the growth pretty much in the single digit sort of volumes. So we are very selective in our within our coverage universe. We are selectively positive on some of the companies. So we like Tata Consumer. We like ITC's food business, and given the fact that volumes have recovered in cigarette business, so we like ITC from both these perspectives. And we like Tata Consumer, as I mentioned, given the fact that it is entirely in the foods category. It has forayed in multiple categories where the unorganized portion is very high. Pulses is one of the categories, spices, pulses, dry fruits. These are the category where we can see a huge growth over the period of time and a more sustainable growth over the period of time. Whereas, as I mentioned, personal care is one of the categories where the penetration levels are about 80-90%, and the growth could be very very subdued in these categories.
Okay, all right. So, what about the earnings forecast in the second half? Should we expect the benefit coming in from the lowering of raw material spot prices? Do you think demand will also start picking up meaningfully second half onwards? Or do you think we'll have to wait and see how this plays out?
No, I strongly believe that Q2 we still would see a largely a price-driven growth. Volumes will still be very subdued, given the fact that grammage restoration has not taken place. We know that in a smaller SKU, the grammage is play much more important part, and companies have rather reduce the grammage rather than taking a price hike, in last 1 year. And so the grammage restoration would lead to the volume growth, but that will only be reflected in Q3 onwards. I believe we could see decent volume growth, at least overall. If I see the FMCG universe, probably the high single digits volume growth is expected in H2. And moreover, I think the gross margin contraction which we have seen in last 1 year would not be there, and probably the huge dip in the edible oil prices and the somewhat in crude prices will be reflected in the gross margin improvement. But that, as I mentioned, can only be seen from H2 onwards, or means Q3 onwards. So yeah.
All right, Sanjay, great chatting with you and getting in your thoughts on how Q2 and beyond will pan out for FMCG space. And of course, thanks for flagging off those stocks as well for those who are interested in investing in this particular sector. Back to technicals with Raja Venkatraman. Raja, any of these FMCG names that have caught your attention going by the technicals?
Yeah, when you talk of the FMCG space, there are certain names which still hold out, which I believe can help us move ahead. One is ITC, which I feel that it continues to hold its higher levels around 330. And the other stock is Godrej CP, which after a recent downward trend which we saw in September, it has entered into a strong set of supports, and there's a good value zone around 810 to 820. So that could be kept as a stop, and one could take a positional play for higher levels towards 920 in the next 1 month, because it's showing a good recovery here, and I feel that that could be a good stock to watch out for.
Okay, all right. A lot of queries also coming your way. So let's get started with that. The first question I want to address, this is from Naveen. He wants your advice on Adani Transmission. A significant 1,000 rupees drop in the last 3-4 weeks. Do you think the weakness could continue in the near term?
Yeah, actually, the bullish run in Adani seems to have come to a halt, and we are witnessing some bit of profit booking. Yes, immediately the support zones in Adani Transmissions is around 2800 levels. So as long as 2800 level holds, this could be a good zone. If there is a rebound from here, this could be a good zone to add into Adani Transmission, which would give us a good way to average our position and head for higher.
Okay, all right. Moving on to the next question. This is from Rajesh. He wants your view on CDSL. How's the chart looking? Okay, I think we've snapped that link with Raja, so we'll have to reconnect with him. Okay, Raja is back with us. Raja, we were taking some of the viewer queries. The next question which I was flagging off was from Rajesh. He wants your view on CDSL. So if you could talk to us about the chart.
Sure. So CDSL has been waxing and waning, and there has not been really clearly any trend being witnessed. So I would not, the immediate supports for CDSL is around 1200. Well, the overall structure of the charts continue to remain tense, and it could attract some more bearish pressure in the coming days. So if you are a new investor, then you should not be looking into this. But if you are already having your position, then around 1200 could be your important level to watch out for. Okay.
The next query coming your way, this is from Aarti. She wants to know if it's a good time to buy Ashok Leyland for short-term trading. Ashok Leyland, last 5-6 weeks, if we look at the stock pattern, it has been very divergent. It has seen extreme highs and lows. But net, since end of August, it has not generated any gains, largely flattish at 146-47 levels. Do you recommend somebody to buy in for the short term?
I would not be a buyer in Ashok Leyland, because the kind of news flows which has been there in the defense space and what it has been trying to achieve, it's not been witnessed on the charts, and largely I see more of bearish bias being witnessed in this counter. So it would be an avoid from my side.
Okay, so an avoid on Ashok Leyland. Next query coming in, this is from Surya. They want your advice on Oberoi Realty. What's your view there?
The realty sector itself has been doing quite well, and the sector has been benefited over the last few years based on the kind of growth which we have seen in this space in the last few years. Now, the charts have witnessed some profit booking, and it's trying to hold off around 880 to 890 levels, and it's trying to recover from here. So I would wait and track the stock. It would be in my tracking list, and I would see if there is a rebound from here, and then I would be a buyer.
Okay, all right. The next question I want to address is from Sudha, and she's asking if she can buy India Cements at the current levels, close to 235 rupees right now. Since September end, the stock did try to, sort of rebound from those levels, but it hasn't really been able to sustain a proper or a consistent uptrend. Talk to us about the way forward.
Yeah, the cement sector itself had a very good run in the last few weeks. But then now what I'm seeing is that there is some constant profit booking being witnessed, and I believe that this profit booking could continue. We saw ACC yesterday, similar thing happened. So I believe that this sector will continue to witness some profit booking, and we should not venture into this sector at the moment.
Okay, so avoid India Cements also right now. Next query from Niharika. She's asking your view on the pharma index and Sun Pharma in particular. How are they both placed?
See, pharma is mixing in a neutral way because there are certain stocks which are doing well. There are certain, so basically it is a mix. And from the pharma space, only two stocks have been doing really well, which is Sun Pharma and the other is Cipla. So if you want to be a buyer in pharma, then these are the names which I would recommend, because every dip in this counter is being bought into. So now when you talk about Sun Pharma has managed to clear the April highs, and it has sustained above the April highs, and it's trying to move higher. So we could expect a target towards 1100 in the next few months. If you want to consider a stop loss, that would be in the region of 940 levels.
Okay, all right. I can see that you have a mixed strategy for recommending to our viewers one sell and one buy. So let's get to that. What are the stocks on your radar?
Yeah, so like I said, that markets are going to trade into resistance, but then there are certain stocks which have come into good dips, and from the oil and gas space, I found that IGL has come into a good dip, and yesterday too, it was trying to rebound, and it held on to its morning lows. So I would be a buyer in IGL at current levels, placing a stop at 364 for an upward target of 381, 386. And in SBI Life, I found that there has been an important gap on the daily charts that has been broken decisively. So I would be a seller in SBI Life at current levels with a stop at 1202 for a target of 1165 to 1155.
All right. Thanks so much, Raja, for flagging off these stocks and helping our viewers out. It's always great to have you on board. On that note, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.